Everyone, my name is Karina McLeod and I'm the CEO and founder of Arachis 3. Arachis 3 is an organisation that's been set up as a social enterprise to support other social enterprises, ethical businesses and the wider social economy sector with capacity building, with certain legal issues that they might have as well. So I've been set up since 2022. But previously worked for another organisation which sadly closed last year as well. So I wanted to offer some webinars to people, and I'm going to be doing a series of these webinars. So this one is going to be covering legal structures, as there's still quite a lot of confusion on there. So I will be concentrating on legal structures for social enterprise in this session, and I hope you enjoy it and decide to subscribe to some of my other webinars as well. So I'll get started by sharing my screen and we will start from there. Right, let's get started. So as I said, we are going to be concentrating on the social enterprise world as there seems to be a bit of confusion around there. So I mentioned already about the confusion that is attached to social enterprise legal structure. And the question sort of becomes, why all the fuss? Why is it so confusing? But also, why is it so important as well? And I think the fuss is because it feels like such a big decision that you have to make when you're starting out your enterprise. But also it feels that there's not a lot of information out there as to what is the best one for you. And it is an important decision for every social entrepreneur. And once you're in it, it can be sometimes difficult to come back out of it. So there is a lot of importance in which model you choose. And sometimes when you're looking at the models, nothing feels quite right. And I think that can sometimes create a bit of confusion as well. What we're going to be looking at today is social enterprise and what it is and what legal structures are available for it as well. So when you're looking at what a social enterprise is, there's a lot of confusion around this, and sometimes people, when they come to access my advice, they're still not really sure. They've been told they should set up a social enterprise, but they're still not all that sure what that actually means for them. So when we talk about social enterprise, the first thing that we really want to think about it and say about it is that it's not a legal structure. It's a way of doing business. It's a concept. It's a badge that you wear, but there's no real defined definition of what a social enterprise is. So there are different viewpoints on what that is, and there's lots of discussions that have taken place over many, many years about what that might look like. And I think that certainly does create a bit of confusion around it as well. So I'm just going to work off of what the position would normally be in Scotland, which is that a social enterprise is a business. It is a business that sells a product, it sells a service, but its main focus and its main priority is around its social mission. So it could be to benefit a community, it could be to benefit the environment, or a mixture of both. It's about the social mission being primarily what the focus is, rather than the existence of profit. But that is not to say that you do not make a profit, because I think that should be encouraged, because as I just said, it is a business and it needs to make profit. But what you do with your profit makes it different to other normal businesses out there in the world. So we're looking at the profits being reinvested into the social mission. So the position that is generally viewed in Scotland is that it will be 100% reinvestment. And obviously there are exceptions to that rule, and there's lots of nuance around that. But, you know, when we're talking about what a social enterprise is, that is generally the position that we find in Scotland. So your legal structure is something that you apply to your social enterprise badge. So the legal structures that we have available, anybody can set those up. Anybody can set up the ones that are available, and you embed the social enterprise characteristics into the legal structures that you have available. And again, I think this is where the confusion comes in, and there isn't a social enterprise regulator. So that is why you don't get regulated on the social enterprise aspects. That is not to say that you don't get regulated on certain other aspects when you're in some of the legal structures that we'll talk about today. But for the purposes of what a social enterprise is, you're not going to be regulated on that part. So again, the confusion comes in from that. But social enterprise, we've got a really mature sector here in Scotland, and we're really well catered for in terms of support and learning opportunities and networking opportunities, and generally, it is a well-funded support system. But sometimes people find their way into it and still not really sure. So that is the purpose of this webinar today, is to give a little bit of clarity around that and speak in a straightforward way so that you understand what these structures mean, what a social enterprise is. I'm going to also put a little bit of governance in there as well. I'm going to talk about bank accounts, so I'm going to throw a lot at you today, but hopefully you will find it useful. And before we go any further, I would probably like to suggest that if you wanted a one-on-one with me, that you can use my website, www.aricus3.co.uk, which offers the opportunity to meet with me for 30 minutes, and any further consultations have a fixed fee on them. So I would encourage you all to do that if you want to discuss your particular project or organisation, if there's anything that you're needing to look at. So onward, let's go on, and we'll look at the asset lock. So this might not be a phrase or a terminology that you are used to using, and it's the terminology I use, and it's the terminology that social enterprise usually uses, but it can look different in different legal structures. But when we talk about social enterprise, the asset lock will come hand in hand with that, because if you look at private business and what private business is there to do, a social enterprise is there primarily for its social mission. Normal trading commercial business is there about profit, and it's there about making money, and it's got that focus on those aspects, and there is nothing wrong with that at all, but it's just what the mainline focus is on. So when you're looking at a private business versus a social enterprise, it's the asset lock that's going to differentiate the two from each other. So it's really important to note what that term is and what we actually mean by asset lock if you're not familiar with that terminology. So it is a fundamental feature of social enterprise, but not all organisations that do good things will have an asset lock. It is just the social enterprise world that adopts this characteristic, if you like, into their business model, so that they can show the outside world, show funders, stakeholders, everybody in between, that they are asset locked, and what they do with their profits is slightly different from what a normal business would do. So the asset lock fundamentally means that your assets and or profits are used for social good, community benefit, public benefit, and that's why that's what you are declaring, that's what you are pledging that you're going to do. So if you were to dissolve your social enterprise, your asset lock would have the particular wording that ensures that your assets would be provided to another asset locked body if you were to dissolve once all your debts are paid. It also means that you reinvest your profit, and there are certain characteristics, there are certain values and behaviours in the sector that most, or some people tend to adopt. So it is looking at those if you want to do that. So there's a voluntary code of practice that sets out these values and behaviours. The slide shows what that website looks like, but that is a voluntary code of practice. It's not something you have to adopt. It's not a quality assurance mark or anything like that. It is just a way of maybe seeing what some other social enterprises are doing, and that is always subject to change. The code, as it's referred to, is made up of people from within the sector, and it is always a discussion that is ongoing all the time. And I've been in the social enterprise world for over a decade now, and those discussions are still ongoing. But for me as an advisor, I would always say to you, it's about focusing on what you're going to do and not worrying so much about what everybody else is going to do. And my job as an advisor is to tell you to focus on that, because it's about what you're going to do, how you're going to do it, where you're going to do it, who you're going to benefit, that kind of thing. And that's where the focus should be, and all around the planning. But we're going to touch on that in a wee minute. You may be surprised to know that this is a session on legal structures, but I do spend quite a bit of time not actually talking about legal structures. And I think the reason for that is because there's so many things to consider before you decide on the model, that when you look at other things first, it can sometimes whittle down the options that seem quite overwhelming when you first go to look at that. So that's what we're going to move on to. One of the things that you're looking at is doing, it's very cliche, I appreciate that. It's about the business planning. It's about the development of the idea and how you're going to make it work, and the financial planning around that. And I will let you into a secret. The legal structures that we have available to us, like I say, they're available to anybody who's eligible to set them up. There is no perfect one. So sometimes that is the thing that people are looking for, but it just does not exist. Some have pros and cons. Some have pros that are relevant to one person and not to another. So it is around doing that planning so that there's less options that you need to go through, because it can seem like a minefield and really overwhelming at first. So it's really important. Let's look at what you're going to do first before looking at the legal structure. So it's chicken and egg. So you don't know what you should do first, but that is what I tend to advise people. The structure should really suit your longer term plans as well. And that's why you need to know what they are first. And are you, as an individual or the group that you are setting up an organisation with, are you aware of any compliance requirements for a particular legal structure as well? Because they all have their different ones as well. And I think my job as an advisor as well is to let you know what that is, because once an advisor is done with you, they're done with you. So it's your job to know, as directors, as the board, as the management committee, it's your job to know what your obligations are on an ongoing basis. And unfortunately, what I see in my line of work, giving legal advice to the sector, is that people sometimes don't realise what these ongoing responsibilities are, and they can fall foul of them, because certain regulatory bodies don't have any interest in the fact that you might be a small social enterprise, your trading is nearly zero. Compliance is compliance as far as they're concerned, and there's very little leeway or excuse for not doing something that you said that you were going to do by way of what the law says. So it is quite important to note these in compliance requirements, but it's easy to break those down. It can seem like a really huge undertaking at first, but once you get into it, once you start doing it, it's not so difficult, or just you get used to it. You get used to the difficulty. And if you're already in an existing organisation, it's really important to look at any existing obligations that you might have, any relationships or agreements or commitments, and do your due diligence, and never get that right, to make sure that you're crossing over or incorporating in the correct way, and you're passing and taking everything over into that structure, if that is the intention. So that is the first things first that we look at. So what's next? Some of the things that we need to look at in a bit more detail when we are considering being or becoming or changing to a social enterprise is around these 4 things that I have on the slide. So the first is social impact. What are you going to do? How are you going to benefit? Over the years, and then maybe it's people can't articulate what it is that they're planning on doing, but it's surprising how little people can say about how they benefit the community or public or whatever. So getting that pitch down is really, really important. So what are you going to do and who benefits from that, I think is really important. So I'm going to go into these in a bit more detail in a second. Finance, it's all about the money. So looking at how you finance your organisation and the different ways that you might want to do that. Sustainability and planning, again, this is cliche, I'm not reinventing the wheel here, but it is about looking at, you want your organisation to still exist in many, many years to come, and really you want it to, outlive you. You want a succession plan in there, because if you're providing something key, you don't want that to be taken away due to, not planning or poor governance or whatever. So these things are quite important. So liability as well, and we'll look at the kind of risk elements of that. So like I say, we're going to move on to these in a bit more detail, but I just wanted to highlight them at this point. So one of the other things that we need to think about is control. So control is a really important factor when we're looking at social enterprise. And the reason is, I think people are either, they don't want to admit that control is something that is important to them, but it should be a priority. Because if you're setting up by yourself and then suddenly you are having to add a board for whatever reason, that dilutes your control. So you need to think about any longer term consequences of that. So if you are on a board with 2 other people, then it means that they could potentially outvote you or remove you even from the board. And yes, that is very extreme examples, and it shouldn't be something that you're afraid of, but it's about the awareness about what a board means for you as well. And again, going back to my earlier point about doing things that's at the right pace for you and for your organisation as well. But control is a huge aspect of it. And when you've put so much effort and so much time and blood, sweat and tears into your organisation, you want to ensure that you're the one who's primarily making a lot of those decisions. Now that could be operationally speaking, so that could be you know, you might have a board and you might be, like myself, the CEO of the organisation as well, so you're doing the operational things day to day. That delegated authority comes from your board, and it means that you report back to them and you're accountable back to them. But that's us kind of jumping forward into a little bit of the governance. But I mention it now just so that you're aware of this control and why it's important and how it can affect you later on. So who's going to be running the organisation? Are you going to be doing this yourself? Are you going to have a board? Are there any reasons why you have to have a board, and all the rest of it? So how are you going to manage those things? Are you going to control it as a founder, like I've just said, in an employment role, and report back to the board? Or are you going to have a larger board and you're going to be much more accountable for that? So a lot of the legal structures that we have state out the control and the decision makers and who where those decisions rest in the legal structures, which we'll touch on again in a minute. So who? I've mentioned the terminology about directors and boards already, but then we have to remember that there are other decision makers in a lot of these structures. And I mention this now because there are, most of the structures that we'll look at will have this form of membership in here. So the membership is quite important within a lot of these structures because it means control. So you might be a member of your gym or a member of your library, but you don't have any say in how they actually govern their organisations. So when we're looking at social enterprise structures, the membership becomes really, really important. So again, this sometimes might feel like this is too early to mention this, but before we even touch on the legal structures, we'll look at the membership now so that we know what it means when we are looking at the legal structures in a wee second. So the directors and the board are usually one and the same. So when you're looking at a limited company or some of the other legal structures, you know, you might collectively refer to people as the board, but in a limited company, it's directors. In a charitable organisation, it's trustees. In an unincorporated association, for example, it might be the management committee or the committee of management. So it is just those collective terms that are used for the people who are in control of the day-to-day running of the organisation. That's not to say that that's operational. That could be strategic, financial control that they're doing instead, and looking at the different ways that you have the control sitting within your legal structure. So I refer to terminology such as single tier, and two-tier. So when we're looking at a two-tier organisation, that is straightforward and that is familiar to a lot of people. So say if you're a member of the National Trust for Scotland, for example, you have a membership, you might get invited to EGM, you might be part of a local community organisation, a village hall, that kind of thing. So that is your traditional two-tier. And it's kind of like a hierarchy. So you have your members here, you've got your board here. And members can be stakeholders or they can be members of the community. And they're very crucial and they normally have the ultimate control in these structures. So it's part of the governance, it's part of decision making, and it does have a governance role within that. And sometimes that can get watered down because of this word member. But if you think about it in the way that it's meant to, your membership equals votes and your membership equals control. So it's really important to kind of determine that if you want or need a separate membership. So for some organisations, for example, if you're looking at a community asset transfer, or you're looking at taking on a community asset in some way, you would normally have this two-tier structure where you're led, your membership is made up of people within that community, either geographical or the community of interest. Now, that is not to say that that is always the case for all organisations, because you might, if you're a smaller organisation where you don't want or need this separate membership, you might have a single tier. So your single tier is everything's on one level. So the members and the directors are the same people, and it just means that directors, for the most part, act in their capacity as directors. But for certain decisions, they will act in their capacity as members. So I appreciate this is very confusing, and that is why you may want to book a consultation to kind of chat some of this through and how it affects you and your organisation. But I mention it now because it's surprising how little people know about this when they're already in these organisations. So I mention it now because it's very much underpinning the control, and it kind of goes across the board when it comes to the legal structures that we'll talk about today. So that's a whistle-stop tour, but certainly I hope it has either solidified what you knew, or it has given you some information about what we're talking about when we mean control and when we mean members as well. So the Social Enterprise Board. So I would say a board is crucial from the purposes of good governance, whatever that is. There's no one size fits all, but a board can be crucial for support, if nothing else, but also to complement your skills and experience when it comes to setting up your organisation. So when you look at certain private businesses, you know, they quite often have a board as well, but boards mean control as well, and boards mean votes, and the more people you have on the board, the more complex, I guess, things can become sometimes. And boards, you know, are normally run in the same way, whether you're in the private sector, public sector, you know, limited companies by shares, commercial companies, that kind of thing. Boards are normally still running that same way. The reality is that a board, you know, quite often needs a bit of help with the governance and compliance, because there's sometimes a lack of clarity around what the roles and responsibilities are under there. But I always say to most people who come through my service is that you don't need a board immediately. You don't need to dilute the control. You might already be coming as a committee. You might already be there. But when we're looking at social enterprises, quite often it is founder-led, and it is one person who's coming along with an idea and with a need in a community, and they want to fill that gap, and they really want to do something good, and they've maybe never run a business before either. So there's a lot of learning. It's a huge curve, and there's a lot to know, you know, before you even start, which is quite overwhelming. And there's always this consensus that everybody needs a board. And that might be true ultimately, but I always think it's better to work up to that. When you're looking at funding streams, then certainly there is normally a board of 3 unrelated people that is expected from you. But those people should be added as and when you need them, and based on skills and experience, or people that you trust, or a mixture of both, before adding that, or you can add them straight away. It really just depends on you. But if you have no one and you are suddenly going to an open recruitment before you've even really thought about anything, that just might be too soon for you. Maybe it's time to embed yourself in your organisation first and then move up to that. But again, there's no hard and fast rules. That just tends to be the advice that I'm giving the founder-led social enterprise, so that you can protect and or just dictate, I guess, these initial steps, because they're quite crucial, they're quite important. So again, we talk a lot about things that aren't to do with legal structures, as you can see, but I really think it's important. So the money is the next thing that we always want to talk about, because there is always the consensus that social enterprises are going to be looking for funding at some point. So you might be getting this money through startup funding. like kind of entrepreneurs funding. So that could be Unlimited or Firstport or one of those types of organisation. And those types of funding, they normally fund the person, not the organisation. And that is really, really useful, especially to kind of gather some of your, and pay for some of your legal costs or website costs or initial kind of startup costs, which can be really, really great. But then you need to look at what the finance looks like once you're set up and once you're established and what that looks like for you. Because, within the third sector, within social enterprise, you will be once you're kind of structured correctly, entitled to apply for funding. And you've got as much chance as anybody else to do that. But it's a very competitive market. And funding that pops up for projects is, of course, welcomed. But there's a lot of hoops. There's a lot of things that you need to do in order to secure that funding. And sometimes funders are giving out governance advice of what you should and shouldn't be. And some structures aren't eligible for certain funding pots. So, you need to look at if your structure is right and to go for the funding that you're looking for. I mean, really what we have to remember is that funding is public monies for the most part. So you are looking at more stringent requirements for that. So when you're looking at a funder like, Robertson Trust or a lottery, they are looking for you to be structured in that certain way. So asset locked, have a board, at least 2, 3 plus people on that board. So it doesn't just look like a one-woman band setting up an organisation and taking all this public money and using it for their own benefit or whatever. So there is that scrutiny and regulation, I guess, that is on those funding streams. But it is something that you should be going for, but not necessarily bending over backwards to do that. A social enterprise, like I said in the beginning, is a business. So it is a good idea in your planning stages to look at how you will income generate, as well as and try and blend the two within that. And you may be looking at other sources of finance as well. So you can see on the screen here, it's pretty self-explanatory. We have loans in the usual way. So we've got kind of commercial, kind of high street banks and lenders. Or you might have more specific lenders that are for the third sector. So Social Investment Scotland being one of them, and that could be a good way of doing that. So social investment is the next one. So that is about either loan or equity finance that is based on what your social output is, and it will have repayment terms within that. Crowdfunding is another useful way of generating income into your organisation. It can be quite a difficult way of doing things, but some organisations do really, really well with it, depending on their service or who the beneficiaries are. So it's something to think of. There's lots of platforms out there. And there could be things like community bonds, or there could be other forms of finance, that you may be interested in. For example, Scottish Community Finance offer community bonds, bonds even, excuse me, and they also offer bridging loans if you're waiting for money for certain things. So there's a good resource to go to if you're looking at that. Or you could have a blend of all of the above. And the thing is, finance is one of those things, getting to grips with it really, really early within your organisation, so you know what your projections are, you know what your cash flow is doing. You're producing management accounts, so you know exactly what the financial position is all the time. And that would be part of your legal duty for certain structures that we're going to talk about. So finance out. So another thing about social enterprise is that money needs to go out just like it needs to come in. So when you're looking at what money comes out, obviously you've got your ongoing expenses and running costs and all that kind of thing. And most people will say to me, what do we do to get money? How do we earn money from our social enterprise? And usually the way of doing that is around salary. So you go on the books as an employee like any other, but you just happen to be a director as well. So that is usually what most social enterprises might do, and they might do it in that way. It's always useful to get some advice if there's any other forms of director's remuneration that you might be taking, and there could be ongoing other tax obligations around that. So yes, seek some separate advice around that. But that is the way that is normally done. So you have a contract like any other, but you happen to be a director as well. So again, going back to the funding point of view, sometimes funders they might have an issue with directors' remuneration or directors' salaries or whatever. But again, that's a case-by-case basis and just worth investigating if it's something that's going to affect you. So the other thing is directors' loans. So this is something that's built into limited companies, where directors can take loans or actually give loans, to be honest, as well, into the limited company. But one thing that we do know for sure about Finance Out is that we do not profit share. So I think it's important at this point to look at what we mean by profit. So profit is surplus. Profit is what is left over once all the ins are in, when all the outs are out. It is what is left over if there's anything there. So depending on your structure, that sum may be liable for corporation tax. So it's what is left over, really. And if you've got a really good grasp on what you are doing from a financial control point of view, you can be able to project what those profits are going to look like. So that could be a good time if you're going to purchase anything, get rid of any funding that could be left over that looks a bit like profit. Doesn't always happen, but it's worth pointing out anyway. And that profit is reinvested or used for community benefit. You could donate it to a charity, for example, or you could reinvest it back in, but it is not given out by way of dividends and or bonuses to the members of the organisation. That is the point of the asset lock. That is the point of social enterprise right there in this bit. It's about profit sharing. It's about the surplus being distributed to the people who have set it up. And that's what we mean when we say not for profit. We mean, yes, make a profit, but we mean we don't distribute it. So it might be not for personal profit instead of not for profit, which I think is a bit misleading. But that's what we're talking about here. We are talking about that surplus. So there might be some years you don't make one. There could be some years that you make a loss as well. So it is worth pointing out that we mean profit, not income. And usually the profit will be used directly for those good causes. So sustainability, I touched on this earlier. So the planning around what you're going to do within your social enterprise is hugely important. And it's important to also recognise that the dual purpose that exists within social enterprise is something that is very, very real. It's a very real challenge for us all. Running your organisation with a business-like approach and creating that social and or community good is hard. A lot of us are so focused on the delivery of the social outcomes that we forget about the business part of it. And I'm talking as in myself as well. And you're so busy wanting to get your services out there or to help who you've set out to help. And you forget that you need to run it like a business. And that is a challenge because it's hard enough running a business for business's sake. So that is that dual purpose. And, it is difficult because you feel like if you give up, there's an ethical conundrum there. But it is tough and there is a lot of burnout and a lot of social enterprises start and close within, a matter of years, months in some cases. So, knowing what your business is going to do from a trading perspective and knowing how your business is going to develop and any risk assessment that you might be looking at as to what you can do to make your business sustainable. And there is lots of support out there for that. Just Enterprise is one of the things that you might want to access around what that planning looks like, or your TSI as well, or your social enterprise network, and just going into those support organisations that already exist that are there to help you with these things. Finally, we're getting to the legal structure side of things. So I did a lot of talking. None of it really was about legal structures, but we're going to get into the bones of it now. And as I've mentioned, it really is just to talk about some of the things to think about in advance of setting up your legal structure. So what I'm going to do is kind of look at the structures and look at the kind of pros and cons of them as well. So I have put this one here. So it's the unincorporated legal forms. I'm not going into any detail in these, because why would you do that? And the reason I'm saying that is not because there's anything wrong with them, but when you're setting up an organisation, one of the things you need to look at is the risk. So any form of setting up anything, any business is going to be a risk. And risk assessment is about determining what risks are too great for you and which ones aren't, and what might be the consequences of that, taking that risk. So when you're looking at legal forms, The ones really that you want to be looking at are the incorporated versions. So that is what we're going to talk about next. But I mention this because there might be some groups out there who are listening to this, or who you know, or who you might be involved in as another board member of. And looking at these unincorporated legal forms. So these were fine and dandy for many, many, many moons, because you would just set up something on a constitution. It doesn't have a legal form, it doesn't have a legal personality. It is just a document that binds all of you together. So you've got a common purpose. And it's really easy to set that up. But because it doesn't exist in the legal sense, there's too much risk attached to it. So it might be good for, parents groups, or might be good for certain other groups that really don't have a lot of risk attached to them. Could be a scout group or something like that. But you need to look at what that organisation may be doing, and there'll be trigger points for incorporation. So you need to look at the trigger points for risk that mean that you're bringing too much risk on your own personal, assets. So that's why you need to look at the incorporated rather than the unincorporated. So the unincorporated structures were really easy to set up. So unincorporated associations, trusts, even sole traders to a point, there's a lot of risk attached to that. So if you're entering into contracts about to take on staff, taking on monies, taking on anything, those are your points to think, is this the right thing for us? Am I aware of the risk that this is bringing? So when you have a structure like this that doesn't have a legal personality or a legal identity, or becomes a legal entity in its own right, then it means that the people who are on the committee are the people who are holding assets and entering into contracts, not the thing itself. So the thing itself might have a name, absolutely, but it doesn't have a legal identity in the eyes of the law. So it can't hold assets, it might have a bank account in its name, but it's not actually holding assets. The people who are running it are the people who are responsible for the money in that account. The people who, if they want to sign a lease, it would be their names on it. So that would mean if there's any challenge for debts, the people who have set up these types of legal forms will or may be liable for those things. And it could be decisions that they made as a collective, which is way too much risk. It's far too much. So looking at these unincorporated legal forms, they might be okay to bind you together while you're piloting or while you are developing an idea, but you maybe need to look at the legal forms that we'll talk about in a minute. But it's important to note, because there's still some charities that exist in an unincorporated form with charitable status, and the charitable status doesn't actually offer any protection within that. That is different from a scale for anyone who's jumping ahead, like I am. So you need to be aware of that risk and that liability that is coming onto you personally and your personal assets, which seems crazy when you think about you're doing things as a collective. It's not just you making those decisions, but also it's for an organisation that maybe exists in your community and you're just helping out. You certainly wouldn't want any personal liability or risk coming to your door and your assets and your family assets as well. So important to note. I wouldn't suggest any of those. So as a viable option, really, if you're going to be doing business, you'll be better looking at the other types of organisation and the incorporated legal forms instead. And that does obviously bring more regulation, but that's not a bad thing in most cases. So when you're looking at if you're going to have any of these trigger points, then it's time to formally look at the formal entities, I guess. So there's too much risk attached for that. But again, I mention it because people say, well, what about an unincorporated association? And this is why we say probably not. And trusts are included in this as well. So when I talk about trusts under unincorporated, I mean traditional trusts. So it could be a trust that is set up under a will, for example, or it could be a trust that's a traditional trust. But just to confuse everybody, sometimes you've got a trust that's an incorporated legal form as well. So there's a legal form that's a trust and the principles of being a trust as well. So the principles of being a trust is there's a single tier of trustees that hold assets on behalf of somebody else. So that could be, beneficiaries in a community. So they're two separate things. But in this context, what I mean is a traditional trust that is set up with a trust deed that doesn't have full protection under it either. It's got a little bit more than an unincorporated association, and dependent what's in the trust deed, but certainly they're usually for the older things. They might still be used in estate planning if someone wants monies to be used in a certain way after they pass. But I mention it anyway because there is that bit of confusion out there. So I hope I've cleared that up, and let's move along swiftly. So the first one we're going to look at is the company limited by guarantee. The company limited by guarantee is a lovely, flexible structure, easy to set up. It has limited liability, so it becomes a legal persona once it gets established. It's a stable form. It's a well-known, traditional kind of form of setting up in a formal way. You're governed under Companies House. The reason I mention a company limited by guarantee rather than shares is for that reason. When you have shares, that can sometimes be a barrier to truly being seen as a social enterprise. That can be a barrier if you're applying for funding, that kind of thing. So I've stuck to, for the purposes of doing this generic kind of legal forms and legal structure webinar, I'm just focusing on the ones that are more likely that you will go for. But again, not to sell my services, but I would suggest that you come to me and have a chat, a one-on-one, about what the best structure is for you. Anyway, I digress. Moving back on to the company limited by guarantee. It is a flexible way to trade. It's well established. So company law determines and dictates what that looks like. Within a company limited by guarantee, it doesn't come with the asset lock embedded in it when you set it up. You've got to modify your articles to include them. It is a democratic legal form, so one member, one vote, one director, one vote kind of a situation. So a company limited by guarantee can be on its own with an asset law, can be classed as a social enterprise. A company limited by guarantee can also be a community interest company, which is coming up next. And a company limited by guarantee can also be a charity as well. So it's a company limited by guarantee with charitable status on top. So it's like a special feature that gets added on top, but the legal structure itself comes from the limited by guarantee. So you might call yourself a charitable company in those respects. So you can have it as a kick, as I said. It's viewed favourably, it's trusted, people understand what it is for the most part. To go into the nitty-gritty of the structure, company limited by guarantee has two decision makers. One are members, one is directors, and that it's all about the control that's attached and the decisions that are reserved for the members, the decisions that are reserved for the directors. So what's different between a company limited by guarantee and a company limited by shares is that a company limited by guarantee does not have shares. It has a membership, it has control through its voting rights, and the members act as guarantors. So when you have any limited company, it has limited liability. And what that means is it's got protection within it. So once you get established, it becomes a legal identity, a legal entity in its own right. So it means that once it exists, it's an it, and it can hold assets on your behalf, and you run it as a director / and/or member within that and control it in that way. But it is separate from you. You're not your company, and your company is not you. You are making decisions what's best for it. There are legal duties attached to that, and there is reporting and compliance attached to that. But really, it's a protective bubble around you so that you don't need to be personally liable for anything that the company might do, because again, it might not just be you running it. So that protective veil will only be broken if you do something that's against those legal duties. So the legal duties are quite straightforward. It's about promoting success. It's about managing the company in good faith and to the best of your ability and all the rest of it. So it's quite simple. It's quite straightforward. And there are certain funding streams that you can access as an asset locked fund company limited by guarantee. So a good option. Could also be a springing off point for you as well as an entity. And if it makes you feel any better, I'm a limited company that has an asset lock. So I have a limited by guarantee with an asset lock, and that's how I've chosen to model my own social enterprise, just because of the flexibility that it gives me. And you know, there's not necessarily any regulation on the social enterprise part. That's really for yourself to do, because Companies House doesn't really care if you've got an asset lock or not. They just care that you're submitting your accounts as and when is needed. But it is something that we're all familiar with, and it's important to recognise that it's a really good option, especially if you're really not sure and you need something to get set up fairly quickly, but you might want to move to something else later. It can be a nice little structure. So the limitations would be, so in its basic form, like I say, it doesn't come with the asset lock, and it doesn't come with the social enterprise characteristics that we talked about. It needs to be modified in order to be recognised in that way. And there's no regulation of the social enterprise aspects. I'd keep jumping ahead of myself. There is formal regulation, and everything that you do within your company will be online. So your accounts will be shown in the public record, your paperwork will be shown, your personal information like your address and your date of birth will be redacted, but if you use as your registered office your home address, that will be public view. So it's very transparent. So whether or not you think that's a pro or a con is up to your own perspective, but there is that formal regulation, and you have to understand what your relevant dates are for submissions for accounts, for your confirmation statement, when you should be letting them know about directors changing, all of that kind of thing. So there are things that you do need to be aware of, and the legal duty and responsibility, it's kind of like the carrot and the stick. So you get all of these benefits of incorporation, but this is what you have to do to get them. So that is something to think about. So if you've got a limited company by guarantee that is not a charity, then there will be corporation tax that will be payable on the profit. So going back to the lesson earlier about what a profit is, the corporation tax will be on that. So if any of you have ever been a sole trader before, you know you're taxed on income as you go. So the limited company, the structure is different in that you're taxed on the actual profit rather than ongoing, and whether or not you register for VAT will depend on a few different factors as well, usually about threshold and or if you can reclaim it back, or all the rest of it. So that is the company limited by guarantee in a nutshell. So we're moving on to the community interest company. So what the community interest company is in this very basic form is a limited company. So a community interest company, or a KIC for short, which is how I'll be referring to it going forward. The KIC is a limited company. It is a limited company with special features. So the special feature is that it is primarily designed to benefit the community, and you have to say who, what, where that community is. They also have to state how you benefit those people, and what you do to go about that. It also means that you need to declare what you're going to do with your surplus or your profits within the regulation of a KIC. So the KIC on paper is ideal for social enterprise, because what it does is it encourages the business side of it because of the limited company, but it also is perfect for social enterprise because it has the asset lock that is statutory. So a KIC does not come without an asset lock. It's got wording that has to be inside its articles. There are declarations you need to make when you're a KIC. As a general rule, the KIC side of the regulation is fairly light touch, although you do have submissions to make when you get set up. When you change the objects, so your objectives, your reasons for being your KIC, and on, you know, when you every year in your accounts, you need to declare what this community of interest is. So community of interest is really wide scoping. So it doesn't have to be a where. It can be a who. It could be a who and a where. It could be a community of interest, or just really about how you benefit people, and it could be quite a wide-ranging benefit as well. But you do need to declare what that is. So you are regulated on those social activities and those community activities, and the asset law can't be taken away. So that's why on paper it looks like a really good option for social enterprise, because that's really why it was designed. But because it is a special feature, limited company, it comes in limited by shares, but it also comes in public limited company as well. So for the most part, a lot of people in social enterprise tend to go for the KIC limited by guarantee, because there are no shares, there are no opportunities for dividends being distributed, but there's and that might be more likely to be able to get funding streams for whatever that looks like for you. So when we're looking at a KIC limited by shares, what that means is that the asset lock still exists, but it's not 100%. So it's at least 65% of an asset lock, and 35% may be distributed to the shareholders who have set it up. So what the intention was, I think, is to kind of have the freedom and flexibility of a limited company, but still have this community interest as the primary concern. So again, I think it's really, really useful. There are some funders that wouldn't touch a KIC limited by shares because of the element or the possibility of distributing profit at the end of the year. But again, it's about choosing the model that is best for you and what you tend to do. So if you've got a KIC limited by shares, you might want to take advantage of the fact that you might have angel investors, or you might have people with deeper pockets who might want to invest because they maybe want to use those traditional forms of equity finance, but in the realms of community interest and social enterprise. So yeah, it's worth considering all of the options available to you. But if funding is something that you're interested in, then you might be more inclined to go with a guaranteed model or, around that. So, going back to, not to labour the point, but doing your planning as to how you're going to finance your organisation becomes really important when you're looking at which model to choose. So within the KIC, the director's remuneration is allowable and or encouraged, to be honest, as well. And I'm a huge fan of that because I don't think that we should be doing it voluntarily, because it's a business at the end of the day. Even although we're doing it for good stuff and good reasons, you still should be remunerated in the way that you would normally be remunerated for the job that you do. And it doesn't serve you any benefit not to think of yourself in that way, even although you might be the founder. Running it is hard, and you should be rewarded for the job that you do within that. So obviously it's, some people are, want to take advantage of the system. I don't really know what that looks like, but it's your business and you need to think about what's best for you and how you will remunerate yourself in a way that means that you don't maybe need to take a second job. It means that you're not going to struggle to heat your house. We need to be mindful. We need to look after ourselves within our business. Otherwise, we're all going to burn out, and we kind of are already. So yes, this isn't about legal structure, but I think it's really important as a general rule we should be good employers as social enterprises, including to ourselves. But anyway, I digress again. Moving on swiftly again, the limitations. So even although they've been around since 2005, there's still a bit of a lack of understanding about the structure. There can be a negative perception if they are limited by shares, which, isn't always warranted, because sometimes if you've got a really successful company limited by shares and you've had years and years of goodwill, but you want to maybe turn that into KIC and you want to be asset locked because you believe in the cause, and you believe in benefiting the community, and you're basically giving up a lot of rights that you would have had within your company in order to do so. I don't see how that is a bad thing. It's more of a pledge than some others make. So yeah, it can be one of those things. I think it's very subjective, and it does depend on a case by case basis. But if you want to set up a KIC limited by shares, that's your prerogative to do that. And it doesn't, there would still be good intentions there. It just sometimes the perception in the kind of wider sector, and I hope that starts changing, even though they've been around since 2005. That we are running businesses, and maybe it is time to stop relying on funding as much as we do and look at other more other forms of finance within that. So yes, lots to think about, lots to consider, but that would be one of the drawbacks of the KIC, is that it's that lack of understanding and that perception, but it doesn't always matter how people perceive you. If you're transparent enough in your operations and you know that you're doing the right thing, other people's opinion doesn't really matter. It's only if that extends to opportunities being taken away from you because of the perception that is obviously a bigger issue. So there is additional regulation in that you have to report on the social or community aspect of your business, but I don't think that's a bad thing, and it is fairly light touch as far as regulation goes. So the thing about the KIC, even though it comes packaged in a lot of similar ways to a charity, for example, it doesn't have the same mandatory rates relief or benefits compared to charities. When I look at what KICs are, or social enterprise in general, I think of it like a spectrum. So you've got traditional business over here, you've got charities here. When you think about social enterprise and KICs, I would say they're just down the middle like that. So that is where they sit in that spectrum of business, if you like. The thing about the KIC as well is some funders can be strange about KICs and may preclude KICs from being eligible for funding. But then you see other ones that is the opposite. They'll do KICs and charities and nobody else. So, you know, it's always worth exploring, and part of your business development will look at those funding streams and what might be available for the things that you're doing. So let's move on now we're going to look at mutuals now. So I don't get an awful lot of these, but the principles are really sound in them, because you're looking at mutual society. So there's two different kinds. So there's the cooperative society, that's your traditional cooperative. So, you know, you might have a co-op on your high street. So it's based on that model where you've got this, you know, organisation that is member led, it's member benefit. It is about cooperative principles, which are really high in their standards and ethical way. It's about the members benefiting from what they do. So not all cooperatives, you know, it's about member benefit, but it just depends on what that membership looks like. The cooperative has a corporate status, it has limited liability, it also has an open membership, so you can't dictate who can and can't get in, but members can benefit, so they may be able to get profit sharing elements within that. So the cooperative in the traditional sense is democratic, one member, one vote, that's enshrined in it. There's a lot of more participation and engagement for members within it as well. So, and people really like those high standards and those kind of ethical and member benefit type of thing, but they might not like the regulation, because cooperatives are governed under the FCA regime. So, but people really like them nonetheless, and they still exist, under, you know, in the finance world, in the housing world, that kind of thing. So moving on to the limitations, they're not really designed for social enterprise as such. That doesn't mean that they won't always be, but because of this asset locked, no distribution of profit, doesn't quite fit within the cooperatives. They can't be charitable as well. Regulation can be onerous because you are just dealing with the FCA or the UNLEAR. The familiarity with the structure as well, sometimes people don't really understand it, because they're quite old-fashioned, I guess, in a way. They cost to register them, and depending on how many changes you've made to the rules, those costs will be every year, and there's audit requirements and that kind of thing for them. So it's always worth mentioning, some people are clear that they want to set up co-ops, and they go through an influx every so often. I remember a few years ago, Glasgow City Council they were giving funding out for people who were wanting to set up cooperatives. So, you know, they get a reinsurgent every so often. So Community Benefit Society, this is the other version of the mutual. So again, it's a corporate status. They've got good reasons for being a community benefit society rather than a traditional business. It is about limited liability within the structure as well, an open membership, but they are designed specifically for the member and for the community benefit, rather than the member benefit, which is why there's the two versions of them. Maybe a charity, it has a statutory asset log again. So you tend to find these, you know, Community Share Scotland, I would set these up for community-led initiatives in communities, for buyouts, and that kind of thing. So they're really, really useful, and they've still got a place in these options. And, you know, if there is anything that you are looking for, a community share issue or anything like that, then definitely speak to the team at Community Share Scotland, because they are the experts. And I pretty much can guarantee that they probably have rules in that you can use, or at least support you with what that looks like to get set up with the FCA. So definitely worth looking at if this is of interest to you. So the regulation, again, it's FCA regulation, so it can be fairly onerous. If you go on trying to find anything, it can be quite difficult. Any kind of interactions I've had with the FCA have been exhausting, but they are what they are. And these models, if they are relevant for you, they're great. It's just that regulation can be a bit iffy sometimes, because it's not like Companies House sometimes where you can just lift up the phone and speak to someone in Wales and you have all your answers to all your questions, similar with OSCA. So FCA are just a wee bit slower, a bit more clunky, I would say. But again, that's my opinion on them. Not everybody feels the same way about them. So it does cost to register and remain on there as well. So yeah, a good option for that. So the scale. The scale is one of our newest options available. So the scale, that's what I referred to as, but really it means the Scottish Charitable Incorporated Organisation, A mouthful, but a brilliant little structure, because what this does is it offers organisations who want to be charities to set up a model that is both charitable and incorporated all under the same roof. So before the scale was established in 2011, the only options for charity were a mutual society, a limited company by guarantee, or an unincorporated society, and a trust. So there's only one or two of them that have that limited liability, that kind of protection around them, but not all organisations in the charitable world wanted to be companies that had a directorship and had all these things. It just didn't always mix. I think things have moved on since then, but certainly it was always the understanding that the scale would be established. It is, you know, there's whole chapters on in the 2005 Charity Act about the scale, but it took a few years to develop the model and know really what it meant. So having this one-stop shop for incorporation and charitable status all bound into one means that you're regulated under OSCR only. So it's a really nice structure for people who want to limit their risk but just have one set of regulation. Huzzah, brilliant. It gives the same characteristics as being a company. It has the same benefits, but without having to actually be one. So it's great. It's really, really good for a lot of organisations. And despite what people might say about it, you don't need to be small. You don't need to be like a certain type of charity. To anyone who's eligible to be added as a charity can be a SKIO if they want to be. The SKIO status is, it's got a corporate status, but not a company. So it's quite unusual, but it's quite nifty at the same time. There's less onerous regulation insofar as you have OSCR and one regulation only. However, being a charity means that you're probably more heavily regulated in that you've got more that you need to justify, and you've got more regulation by way of your public benefit and what your trustees do to advance your purposes and all the rest of it. So it is viewed really, really favourably. There's less administration in comparison with companies as well, because you don't need to notify when your trustees move. Currently, that is at the 1st of December 2023, which is when I'm recording this. That is the case. OSCR are getting some brand new powers which might change some of that, but as it stands just now, there are certain things you wouldn't need to tell OSCR about that you would have to tell Companies House about if that's how you were registered. So the good thing about SKIOs as well is that if you're earning under a turnover of £250,000 from all incoming resources, then all you would have to do by way of accounts would be receipts and payments accounts. So they're a simplified version of charity accounts. They still need to be independently examined, but it's it's a much easier form of accounting. If you go over that, or if you've got corporate status like a charitable company, you would need to do fully accrued accounts, which are just dealt with in a different way, and the way that you deal with transactions is slightly different, and they're a wee bit more involved and a bit more complex. Again, examination is needed within that as well. So yeah, it's a nice structure. It's open, it's transparent, and it's viewed favourably, like I've said. So it's quite good. So the thing about the SKIO is its existence depends on being a charity. So you can't become a SKIO unless you become a charity, because it's one and the same. So you've got to pass the charity test in order to become a SKIO. And the same applies to the end of life. So when the SKIO winds up, it doesn't exist entirely. So when the SKIO gets set up, it becomes a being, it becomes a legal entity on the day that it's set up, and that's the day it's born, basically. And the same applies to the end. So when it winds up, it just doesn't have any limited liability, characteristics, none of that. So it's not quick to establish, even in a simple. So at the moment, it's probably looking about 100 days for you to even get your application looked at. And depending on the complexity, it could take a bit longer. So it could be up to 6 months minimum to get it set up. You've got to keep registers of your members and of your trustees, and those are your kind of governing decision makers within that. So again, this membership is rearing its head, and you've got trustees as your board as well, and your members make certain decisions such as changing the constitution, changing the name, and your trustees will do financial control and all the rest of that kind of strategy. But some of these things can be delegated to, by the way. So those registers, you need to keep on top of those. So you need to, if you get changes, you need to be fairly quick in getting those updated on the registers and all the rest of it. So you cannot convert to any other legal form within a SKIO, and you can't amalgamate with another type of charity. You can only amalgamate with other SKIOs as well. So as with any other legal form, there are restrictions in what it can do by way of trading, because you need to, you need to be able to trade in advancement of a purpose. So charitable status, I did this one kind of after the SKIO, because it's basically the same thing, because a SKIO and a charity, another legal form charity, are basically the same, and that charity law underpins it. But there are certain unique things that apply to the SKIO, which I've just talked about. But when we look at charitable status, it is a status, not a structure. But then the SKIO came along and kind of ruined that. But not ruined it, but benefited it, of course. But you were a legal entity, and then the charitable status was like an extra layer that was embedded into your structure. So your limited company, your trust, your unincorporated association, your mutual society, and the charitable status was embedded on the top. And the good thing about being a charity, and the reason that quite a lot of us want to be charities, not all of us, some social enterprises shouldn't be charities or can't be charities for different reasons, but charitable status is something that is quite desirable because there's a familiarity there. Funders know what it is. There's much more funding pots available for that. The public understands what a charity is, and maybe more so than a social enterprise, depending on where you are. A public trust is there. There's rates relief that is mandatory for 80%, 20% discretionary. There's generous tax relief, so you get corporation tax relief. You get other reliefs like on your land and business transaction tax. You get on other forms of tax as well. So you can get donations and get the gifted on that. So any organisation can get donations, but only a charity can get the gifted on that as well. So those funding streams, there's kind of little private trust, public trust that would only fund charities. So those are the benefits. And I've been seeing a bit of a move, and some social enterprises are going to the charitable world because of funding. And, it seems to be the nature of the kind of what we're doing. So when we're looking at the limitations and the cons, if you like, of being a charity, it's restrictions. You don't have as much freedom around activity, around trading, out with the purposes, and you're not as free to trade and income generate in the same way as some of the other models are. But that might be something that you're willing to, and there's other ways around that as well, that you're willing to take, really, because of the benefits that you get. So again, there's legal duties attached to the role of trustee. And if you're a company, you've got that dual regulation. So for social enterprises, and some of the comments I made earlier around paying yourself, there's more restrictive rules and requirements if you're a charity as well. Still possible, but not as easy as some of the other models. So governance, I've mentioned that a couple of times throughout the session, a bit of a governance nerd. But really what we're talking about when we mean governance is really how you go about doing things, the systems, processes, policies, procedures that really set out what you do and how you go about it. But it's also about how you kind of are accountable and how you supervise the activities of your organisation. And also it's about being effective and enhance that effectiveness as you go and comply with your responsibilities. So whose responsibility is it? Well, it is usually the board, and that is normally who would be responsible for that. So it's usually about looking at it from a wider context. You look at the organisation from a step back. And it's about safeguarding the long-term direction, the purpose, and how you put the systems in place to effectively move towards those. But it's also about being accountable for those actions and decisions within that as well. So good practice, if that exists, because it is not one size fits all. It's around getting things in place as and when you need it. There's no blueprint, is what I'm saying. So good practice would be around really being clear on what your vision, your mission, your values are. And these are very much intertwined, but being very clear, why do you exist? What are you here to do? And how are you going to go about it? And developing the plans for doing that. So thinking about shorter term, medium term, longer term, and how you'll go to get where you're going. So complying with your constitution. For the love of God, make sure you understand what's in there, and make sure that it is an active document. It doesn't have to be reviewed every day, a day or every year even, or even every 2 years, as long as it has been produced and used as the way that you look at what your objectives are, you look at how you make decisions, that is all being contained within that. And making sure that new board members know exactly what is in that document as well. It's your starting off point. You might have lots of other paperwork, lots of other policies and procedures and standing orders and reference points, but really that is one of the things that is key to your organisation. So the financial management and record keeping, that's so important. Anyone who's come from sole trader businesses or worked with anywhere else, you've got to keep an adequate record of your financial transactions, but also the financial control, so that you're not opening yourself up to any liability when it comes to your finances. But also setting the direction of your organisation, you need to know what the money's doing. Because you might have a really good business on paper, but actually your cash flow could be terrible, because what you're projecting in your accounts can be sometimes very different to what's actually in your bank account, especially because your profit from last year was from, could be over a year ago. So keeping control of things as well from a financial point of view is hugely important. So if you're on a board and you have a kind of shared governance role with those board members, then you need to run effective meetings. So they don't have to be in-person meetings, but as long as you're making decisions in an effective way and making sure that you are staying on message, that you're being effective, you're getting things done, and that you're making the best use of time for the best benefit of the organisation. Review your performance as well, and making sure you're having an internal review of things as well as the external, and the monitoring of everything and everybody that is in your organisation at the time. So that could extend to volunteers and/or volunteers and employees. It could extend to your other co-board members as well. It's not just out the way. It's in the way too. And arrange training whenever necessary. We've got a plethora of support that is out there. And, again, not to bang the whole I can do this for you drum. But yes, I can. I can do bespoke training for boards as well, similar to this. So I like to talk in a really straightforward way and just make sure that everybody knows what they should be doing within that. So arranging that training and supporting everyone who works within your organisation. Those are your assets, not just about the monetary assets. It's everybody who's in your organisation. They're absolutely the key assets as well. So that would be your good practice. And kind of when you're looking at setting up and you've already established, this is not an exhaustive list, obviously, but some things to think about once you're set up. So hold your first board meeting if you have one. If you're just by yourself, you're not going to hold a meeting by yourself, but look at what you do next. So one of the most logical things you're going to need to do is open a bank account. So I've got a slide on that because it can be quite tricky sometimes with banks, especially now post-COVID. Banks are just a little more demanding when it comes to what you're doing around there. So registering for HMRC for your corporation tax. So when you register a limited company, for example, you need to register for corporation tax at the same time. And if you're going over certain thresholds, then you need to register for VAT as well. Set up a bookkeeping system to keep your financial records kind of ongoing and keep the control there. So there's some really good examples out there. So some people use Sage, some people use FreeAgent, some use QuickBooks or Xero or whatever, but they're just a really good way, and they're normally cloud-based, so you just upload all your receipts there, so you don't need to have boxfuls of paper receipts anymore. So they make it as easy as possible for you to keep an eye on your income, your output, your profit and loss. Usually, most of them do payroll, so it's really, it's a great way of keeping on top of things, and it gives you quite a lot of empowerment over your own finances as well, and not just relying on an accountant to tell you what you should and shouldn't be doing. And that would obviously lessen your fees ultimately as well. So ensuring that your directors, your board, understand the constitution or articles and run the organisation in accordance with that. And so when you get new board members, induct them. So the first thing you want to give them is a set of the articles or constitution, any other relevant paperwork that they might need to see, codes of conduct, for example, it could be business plans, just so that they know the culture of your organisation when they join, so they know what's expected of them as well is what to expect from you. The next thing you need to do is think about what records you need to keep for Companies House, for example. If you are, this is obviously based on your kind of limited company checkup, startup checklist. So thinking about what you might need. So one of the things you're going to need is your statutory register. So that is your register of members, register of directors, your persons with significant control, that kind of thing. So it's important to kind of know what these things are. And know what you need to keep and when. So next thing is insurance. So thinking about what policies you might need. You might need liability insurance, so public liability for some of your activities. Employer's liability when you take yourself on or when you take other staff on as well. Professional indemnity is if you're giving advice. Trustee indemnity or director's indemnity, and that will cover your decisions that you make in office on your board. So health and safety, if you're going to be operating, public facing, then you need to ensure that people are safe and you've got a reasonable level of standards of health and safety that you need to ensure that people are safe when they're using your facilities or using your services. So developing your marketing materials and website, your social media, all of these things as well. But again, there's lots of support in the sector for these things, but it's worth checking in to see what is available for you. So we're getting close to the end. You'll probably be delighted about. So bank accounts, slightly tricky, a bit trickier than probably you might expect or think. So it is good to shop around, and the process can take a little while to complete. So even though your company formation, for example, will probably take 24 hours, it might take several weeks to get your bank account set up. So a personal account can be useful in order to get you a business account. So that can be useful, like RBS. You've got more of a quicker chance of getting an RBS business account if you've got a personal account with them. So choose a current account that offers the service that you need. So whether it's a local branch, most of them don't really have, a lot of the services are central now. But if that's important to your organisation, looking at those different options, so internet banking, do you need to go for one of the high street ones, or can you look for Tide or one of those Monzo business or whatever? And look at these more kind of not on the high street type of banking, and look at the different options around that, because you might get one and then move to one of the high streets later if that is appealing to you. And asking questions about the process. How do you change a signatory? Does it take a long time? Yes, it does usually. And what requirements do they need for identification? Like how long are things going to take? All the rest of it, and beware of any charges. So if you go into an unauthorised overdraft, for example, interest rates is important to look at, and look at if there's anything that needs, dual or if it look at whether your account offers online dual authorization. So in a lot of third sector organisations, maybe not just one person who's got control of the finances, and look at to see if there's any ways that you can dual authorise transactions, if that is what's written into your constitution, which it quite often is. But also, you'll probably need internet banking, you'll probably need digipasses and passwords and apps and all the rest of it. So making sure you've got the ability to be able to use all of those within the business as well, and just be mindful of anything that is across a personal phone or, a business phone and all the rest of it. And just, you're not the organisation is not you, that kind of thing. So SCBO have a kind of accounts comparison. So the URL is there if you want to review that and look at the different options that are available. But again, doing a bit of shopping around as if you were doing your personal one to see what is the best for your organisation. So yes, obviously I know this is a webinar, so there won't be any questions. Well, you might have questions, so you can ping them to me either using my contact box on my website, or you can book in for a consultation. So I think, yes, I did say at the top of the webinar, that I offer 30 minutes for free. and then there's charges associated thereafter. So usually for a legal consultation, it's £150, which kind of can be around about an hour, maybe a wee bit more depending on how we get on. So you can have a consultation for that amount. Also, you know, if you've got any questions about the session as well, or about anything that I've talked about, or about any of the models, you can just ping an email and I can give you a response. Obviously, if there's a million questions, then there might be a charge associated with that, but I'm very upfront with my fees. And I usually do set fees as far as possible so that you are very clear about what you're getting for what money. So I hope you've enjoyed the session. I will be recording other ones as well. I think I'm going to do one on leases and make that available for purchase as well. So I hope you enjoyed, and thank you so much for listening in today. And I hope to meet with you soon. Thank you.